Well, good afternoon, everybody, and welcome to another of the Knowledge Mile 695th Lord Mayor's lecture. Today, the title is Out with Council Tax, In with the Green Land Value Tax, and a little bit of background about it. So, amongst property taxes in major economies, our council tax system here in the UK is uniquely regressive, and both individually and regionally, not helped by the planning regime around it, the exorbitant privileges according to landowners' rights, the nature of council tax itself, and other aspects of taxation around it. So today our speaker is going to make the argument for it to be replaced by a green land value tax, hopefully reducing inequality and intergenerational injustice while improving housing affordability and helping the UK meet its climate goals. So a quick rundown of how the session's going to run. I'm going to introduce our speaker, Professor John Milbaugh, in a moment, after which he'll speak to us for around 22 to 25 minutes. That'll give us lots of times for questions. Please, in asking the questions, if you're dialed into the webinar, you'll see a box on the top right-hand side, a call-out box with a question mark. Please put your questions in there. Please don't put them in the chat. Certainly don't put your hand up, because there's every chance they'll get missed. And we don't want to miss the opportunity for you to pass on to John. We'll get through as many questions as we can. Sometimes we get way too many questions that we can't ask in the session. John will be sent all of your details and the questions that you've asked afterwards, so in his gift to respond to them. You know this is being recorded, and there's a dedicated YouTube channel, so you can re-watch this and share at your leisure. So enough of the parish notices, and now welcome John. Thank you for joining us. So just again, a quick intro for John. Senior Research Fellow of Nuffield College and Senior Fellow of the Institute for Economic Thinking at the Oxford Martin School. Fellow of the British Academy and Econometric. I should have practiced that one, John, before I tried to say it. Society. Best known for his work on household economics, housing markets, and on finance real economy interactions. Works with many central banks and the OECD, and is a frequent contributor to CEPR's Vox EU columns. That is more than enough of my voice. John, I'm going to pass over to you. Very much looking forward to your lecture, sir.
Thank you so much for having me. It's a privilege to be able to talk to tax advisors. Next slide. So I'm going to start by sketching in some economic background, because I think the UK economy, as I'm sure you know, is in a pretty poor state. We've actually run a balance of payments deficit every year since 1984. That means we're producing less than we're consuming. We've got a low national saving and investment rate, nearly the lowest in the OECD. And one consequence of that is that major parts of UK wealth are now owned and controlled by foreigners, with profits shifting abroad to pay for our high consumption relative to our production. Our productivity record is dire. Our average living standards are lower than they were 15 years ago. And we're one of the poorest countries in Northwest Europe if you take out London. And within London, for many people, the high housing costs offset the advantage of higher earnings. As we all know, housing affordability is a problem across the UK, especially for the young. And we're also one of the most unequal countries in Europe. Next slide. We have the highest commuting times in Northwest Europe, the worst insulated homes, and we also have one of the worst fiscal situations. If you look at the net asset position, if you look at government, what government owns relative to debt, we're the second worst in the data that the IMF collects. Brexit has made us poorer. It's undermined investment and productivity growth, and fiscal austerity, the underinvestment in public services, has left public services in a really parlor state. So we are in a very deep hole, and I think part of the problem concerns the role of land in the economy, and that's what I want to talk about next. In my view, the Thatcher period left a very negative long-run legacy. Financial regulation, land use, housing policy, property taxation have left a long shadow, which David Soskisk and I wrote about in the Resolution Foundation paper. That helps to explain the low saving and investment rates that we have in the UK. But even before Thatcher, the 1961 Land Compensation Act gave really remarkable privileges to landowners, much more than exist in other European countries. Recently, there's been just a range of studies, about 8 or 9 different studies, that confirm what happens when you get a credit-fueled real estate boom. It crowds out more productive investment. And there's now quite rigorous evidence on that across 116 countries, within the US, for China, within Europe, and so on. And of course, we know that the global financial crisis left a very serious legacy of government debt. The poor financial regulation that preceded it was part of the reason. We've had a record rise in UK land prices, and that means that the benefits of growth, of course, growth tends to improve land values. Benefits of growth disproportionately accrued to landowners in the financial sector. That's diverted entrepreneurship into rent-seeking and overcoming land constraints. We actually hold the record for the share of home values in land versus buildings. Next slide, please. These are data from the OECD, and essentially what they show is, for a typical house, what fraction of the value of the house is in the land as opposed to the building. The very top line, the dotted line, that's the UK. And it's higher than all other countries for which we have these data. About 70% of the typical UK home, the value is in the land rather than the building. Next slide. So I've been arguing that we need a 4-part policy package. It isn't sufficient just to change planning rules. First one is to enable land value capture. That means that the uplift in land values that comes from infrastructure investment and from planning, being given planning permission, should be shared much more fairly between the current landowner and the taxpayer. That would help to meet infrastructure and housing needs. That was actually widely used in new town development in the 50s to the 70s. If we had better land value capture, housing would become more affordable because land would become cheaper in new developments. To enable land value capture, that would require reform of the 61 Land Compensation Act, and also a shift in the fiscal rule. Now, you may have read in the papers recently that the Treasury is actually thinking about that, so that is a bit of light at the end of the tunnel. And also, land value capture has figured in the Labour manifesto, so not in those words, but effectively. So there is some possibility of progress on that front. And of course, on planning reform, that was a highlight of the Labour manifesto. I think we need something rather more radical than what's being proposed. And Watling and Breach in this lovely paper suggest a whole range of reforms. In principle, a flexible zoning system as opposed to a very highly directed planning system, and very cumbersome planning system. And the idea would be to guarantee planning permission once the zoning requirements and building regulations were met. And merging local plans and local transport plans, housing plans and transport plans, is really important to integrate infrastructure and housing. The third one is to build more social housing and reduce right to buy sales. And certainly on building more social housing, again, there are some noises that suggest the government would like to move in that direction. So finally, reforming property taxes, and that's the theme of the rest of this talk. And on that front, on reforming property taxes, I see little light at the end of the tunnel. So next slide, please. One of the remarkable things about well-designed property taxes is that they solve an age-old economic problem. Economists have been very concerned over many, many years between the conflict between growth and distribution. In other words, if you have a tax system, let's say, or a subsidy system that encourages redistribution, people have argued, well, that tends to reduce the growth rate. It tends to make the economy less efficient. But well-designed property taxes have exactly the opposite consequence. They actually combine better efficiency and better equality. If well-designed, they can broaden the tax base, raise more revenue, shift investment incentives from rent-seeking to productivity-enhancing, reverse widening regional inequality, reduce inequality and social exclusion, intergenerational inequality, improve land value capture, allocate the existing housing stock more efficiently, improve labour market flexibility, given that we could reduce transactions taxes, namely stamp duty, if we put more weight on recurrent property taxes, help to stabilise the macroeconomy, making the life of the Bank of England easier, and make the economy much more adaptable to structural shifts. And there are big structural shifts happening at this very moment. And then finally, of course, there's the greenhouse emission problem. Buildings play a big role in greenhouse emissions. Next slide. Now, the tax system that we've got could hardly be more badly designed. The poll tax that Mrs. Thatcher brought in was replaced by council tax, which started in 1993, based on very crude 1991 valuations, now terribly out of date. And this slide from the Fairer Share website shows how individually regressive the council tax is. If you were in the lowest value tax band A, you pay close to 0.9% of the property value in tax. If you're in the most expensive tax band H, you pay a fraction of 0.1%, typically of value in tax. Next slide, please. And it's regionally regressive. The poorest regions, on the average, council tax as a fraction of the house price is far higher than it is in the most expensive places. Next slide, please. Now, just to illustrate the combination of individual and regional regressivity by taking two examples, a mansion in Westminster and a home in Barrow-in-Furness, absolutely remarkable how the council tax burden as a fraction of value is so very regressive. We have the most regressive property tax in the world. Next slide, please. The OECD has argued in some really outstanding reports. The brick by brick report they produced in 2021 is a fantastic piece of work. And they have the advantage of having a database of 38 countries and rigorously comparing best practice in different countries. And they argue that many countries are underutilizing recurrent property taxes and have lots of scope for increasing those levies. They would benefit the UK as a whole, and within the UK, there's an extra element because the devolved regions, Wales and Scotland, have average incomes that are a lot lower than England, and that limits the scope for raising tax rates on income and economic activity. Raising tax rates on property would help to actually stimulate economic activity in those locations. Land ownership is very concentrated. Scotland is possibly the most concentrated, has possibly the most concentrated land ownership of any significant country that we know. England also has very concentrated land ownership. Extending the coverage of the land registry should be a pretty high priority for any kind of reform. It's not absolutely crucial because one can still tax land that isn't registered, but it's very helpful to have transparency, complete transparency at the land registry. Next slide, please. To broaden the tax base, my view is that high-value agricultural land and vacant land should be brought within the tax base. General principles should govern tax criteria, and it doesn't seem right that agricultural land and vacant land should be exempt from general principles. And I'd suggest that some allowance be given for low value land that would eliminate the tax on most agricultural land. But beyond the first £30,000 per hectare of value, land should be taxed. What's happened because of the low interest rates that we've had in the last 20 years, there have been huge portfolio flows from international investors looking for yield, which have driven up prices. That's increased barriers to entry into farming. It's led to the exit of family farms and increased the riskiness of farming for those who don't have a lot of capital behind them. And it's also raised the prices of agricultural land near towns where towns could possibly have expanded. And that makes the housing affordability problem in cities worse. Part of the increase in transparency that we need is that all options to buy land should be recorded at the land registry, something the Lyons Housing Review, commissioned by the opposition some years ago, 2015, recommended. With this kind of system, most of the rural land in the UK would be tax exempt, and of course national parks and areas of outstanding natural beauty too. Next slide, please. So let me turn to the special advantages of land value tax as opposed to a general property tax. Economists have long regarded a land value tax as the most efficient kind of tax. The OECD makes the point that the supply of land is very inelastic, so taxes on the unimproved value of land are very efficient because they don't cause distortions. There's a huge literature on this, and actually Winston Churchill in 1909 made a really beautiful, coherent and persuasive speech arguing for land value taxation. So a land value tax captures even better than a general property tax the increase in value that comes from infrastructure investment, improvements in quality of local schools or in the environment. It also helps land value capture, which of course is crucial for improving housing affordability. And again, the OECD has done some terrific work on land value capture. The compendium is an encyclopedia of how land value capture operates around the world and could operate. Next slide, please. So one problem that people often put forward when land value taxes are discussed is the question of how do you value land? Now, valuing property is pretty easy. HomeTrack, Zoopla, and so on do a very good job of valuing most of the property houses in the UK. But there aren't that many pure land transactions. So on the face of it, it looks quite difficult. But actually, there are clever hedonic mass valuation measures, statistical methods where multi-year data on parcels of land and housing, I mean the combination of land and housing, with different combinations of land and housing characteristics, can be put through a statistical program to extract land values and building values at the same time. And actually, land price gradients in some ways are easier to identify than the value of buildings. I mean, think of a street where very different houses are next to each other. The land parcels next to each other should have virtually the same price per square meter, irrespective of the building on the land. And that smoothness of land price gradients is actually very helpful in extracting methods of estimation. Next slide, please. So my point is that it's actually quite feasible. And actually recently in Germany's gone through a recent revaluation where everywhere they've separated building values from land values. They've done it practically, so it can be done. Let me turn to the green aspect next. because land value taxation ignores what is done with the land, and some activities on land can be very damaging for the climate. So to give you some background, I imagine most of you know about global heating. We have a pretty unstable global climate. We've called it the global climate accelerator, where there are tipping points and cascades, which are quite similar to the kind of instability that happened in the global financial crisis. So in the global climate accelerator, an accumulation of greenhouse gases, CO2 and methane, raises global temperatures. That in turn leads to the release of even more carbon and even higher temperatures, ultimately making much of the planet uninhabitable. Next slide, please. Here's a graphic that explains how some of this works. Just to give two examples, the Amazon rainforest, because of droughts, because of global heating, the droughts in the forest have caused many wildfires. So the Amazon forest is now close to the point where it's actually emitting more carbon than it absorbs. And previously, it played a very, very important role in the global climate in absorbing a great deal of carbon emitted in the rest of the world. And in the northern permafrost, there's lots of methane trapped under the ice. When the ice melts, that methane is going to get released, and methane is a very powerful greenhouse gas. So just two examples, and there are quite a few others of these tipping points that cause the climate system to be so unstable. Next slide, please. And buildings are heavily involved in the whole climate system. If we don't improve the energy efficiency of long-lived buildings, then it's going to be very hard to moderate the climate crisis. So I would argue that the reform of annual property taxes to make them green, to include discounts for energy efficient buildings, together with subsidies and stronger building regulations, need to be high on the agenda of every government. And interestingly enough, the faster we do this, the faster alternative energy becomes cheaper, and that results in a potential virtuous circle. There's been some very interesting literature on that. Next slide, please. So how does one make land value taxes green? And why is it so important to do it in a way that reduces the burden on the poor? Well, we know the green policies often weigh most heavily on the poor. They worsen housing affordability and fuel poverty. Green taxes, fuel taxes, tougher building regulations that make it costly to build, make life more difficult for poor people. And so it's really important to have compensation, but targeted subsidies and progressive green taxes in finance. So green property taxes helps to resolve this potential conflict between affordability and equity on the one hand and meeting climate goals on the other. So what's the green land value tax? Well, what it is, it's a split rate property tax. There's a charge on the land, a charge on the building, minus a discount. And the discount depends on the carbon emissions of the building. The EPCs that we have in the UK, we actually have one of the best EPC systems in Europe. So that's a plus for realism. Now, any tax reform is going to require deferral. I think deferral is a very important element of any tax reform. And I'm going to propose a simple deferral scheme in contrast to the deferral schemes that currently exist in other countries. Current deferral schemes where debt accumulates at compound interest have been widely offered in quite a few countries, but the take-up is amazingly low. And the reason is probably that there are tough eligibility restrictions, and there's ignorance, complexity, and people worry about the high interest rates on the compound interest as the debt builds up, as debt burden builds up. that would result from deferring property tax. Next slide, please. So my idea is to have a simple deferral mechanism. And I think deferral is really important for public acceptance. We need to protect the cash poor but property rich household. So the idea there is that the tax authority registers a proportionate interest of the land registry equal to the unpaid tax for each year deferred, to be settled when the property is sold. So for example, suppose the tax rate were, let's say, half a percent of value, then a household that decided to defer every year for 10 years would end up losing 5% of the value of the property when ultimately it was sold. So 5% of the value of the property would accrue to the tax authority when the property was eventually sold. A small discount for cash payers would be a good idea, because otherwise there could be too many deferrals, and people who can afford to should be providing the cash up front in order to stabilize the revenues of the public authority. So this kind of proportion of equity deferrals scheme is very simple to understand. People don't have to do complex compound interest calculations. They just take a box in the property tax form, requesting deferral, without having to go through a means test, complex form filling, compound interest calculations. And the evidence is, in the long run, this kind of scheme would have collected a pretty steady revenue flow for public authorities. Now, of course, the revenue flow is going to be less stable than a cash-based system, so national governments need to underwrite deferral schemes at the local level to stabilize local revenue streams. One other useful feature of this mechanism is that it has a useful stabilization property. So in periods where house prices are expected to rise, the incentive to pay cash increases. And that takes money out of the economy just when there's a boom going on, and that tends to stabilize the economy. Next slide, please. This kind of land value tax meets other criteria for property tax design. It helps to overcome the constraints from the planning system. Of course, I'm also proposing the planning system should be reformed at the same time. But if we were forced to remain with the existing planning system, it would still be beneficial. It also improves the allocation of the existing stock. We know that in the UK, I think even more than many other countries, there are many single-person households living in large properties. Peas rattling around in large boxes, when that housing could be provided for younger people. So downsizing for a retired household is something that would be encouraged by a property tax of this kind. Another issue that is very high on the agenda of many places in the UK, where tourism is an important ingredient of local activity, is affordability for local residents. Having a higher tax rates on second homes and international investors would be a good idea to discourage foreign speculation and to improve the utilization rate of existing housing. Next slide, please. Now, of course, the politics of this is really the crucial aspect. Tax reforms always generate winners and losers. So even when there are more winners than losers, there are problems. So one thing that would be necessary to make the tax less onerous in the highest price regions like London, tax allowances can be linked to regional house prices. So the first £50,000 maybe in Wales could be tax exempt. The first £150,000 in London might be tax exempt. Opposition comes from powerful elites. We know all about this, landowning interests, and of course on the climate there are know-nothing climate change deniers financed by the fossil fuel industry, and people who simply deny that society exists. who are so individualistic that they deny that people, one person's activity can have negative effects on society, and from media that promulgate misinformation. And then most citizens and politicians don't understand what economists call general equilibrium. And with the idea that the system, the economy as a whole, is a very complex system with complex interactions. There are many interrelations, spillovers, feedbacks, and unintended consequences of any change in the economy. And then, of course, that makes it absolutely clear that we have to have a phased transition. We can't suddenly jump into this. It has to be phased in over a period of years, probably at least 5 years. Any change creates uncertainty that generates resistance. The losers shout louder than the winners, even when they're heavily outnumbered. Next slide, please. So transition is crucial. And I suggest something like this for realism, not necessarily all in sequence. Some of these things can be done at the same time. So extending the coverage of the land registry I've mentioned. EPCs, we have to have good systems, robust systems, and trained staff to generate energy performance certificates, because their scale, their application has to be expanded. We need to think about how local, regional, national tax regimes, the funding structure of local government, and so on, that needs to be reconsidered. We need to change the planning system. And then we need to revalue properties. We can't live with 1991 valuations. Then we can phase in new non-regressive domestic and business taxes with green discounts and deferral, beginning with the over 65s. At the next revaluation, separate building and land values, and finally phase in the new split rate green property tax. So just one last summary. Next slide, please. So this is what I'm arguing, and this is very much consistent with what the OECD has been saying. Relying less on transaction taxes, more on annual taxes, and shifting the base of these taxes from the value of structures to current land prices. In other words, a split rate system would bring multiple benefits. And, well, the rest of the slide we can leave up during the discussion. Let me stop there. Thank you.
John, thank you. That's very, very interesting. So we've got lots of questions coming in. I'm conscious we're running a wee bit down on time, so getting straight into them. First question, does reform of the property tax, low yield compared to other taxes, deliver sufficient bang to affect the desired behavioural change?
Oh, yes, I would say so. Particularly if we broaden the tax base, as I've suggested. In the long run, enormous behavioral change would come from this kind of change in the tax system.
Okay. Another question. I agree that deferral seems a necessity for a fair LVT, but I'd also want a nil or minimal transaction tax, i.e. SDLT, on land to enable easier selling for the cash poor. Do you agree?
Yes, lowering stamp duty, land tax is absolutely crucial. It's at the moment it's blocking many moves in the property sector. It's helping, part of the reason why downsizing is not happening in the way that it should be.
Okay, there's a kind of slight question as an adjunct to that around the stabilisation of the taxation, because you said obviously the deferral out and central government needs to step in. Obviously, coming out of austerity, central government has been cutting back taxes to local authorities rather than increasing tax revenues to them. Is that a short-term problem, or could that become a longer-term systemic issue?
The local authority grant system has to be changed. We can't live with the kind of local authority austerity, given the important role that local authorities play in so many spheres of activity, and in particular, if you think about potential council housing expanding, that's going to be really important. Now, of course, this links with my point about the fiscal rule. If you have net asset, if you have the net asset position as the focus of government fiscal policy, then when the land, when the government borrows in order to acquire land at lower than full planning permission prices, and that land is then some of that land is then subsequently revalued, the government balance sheet actually improves. And investors see that. It's really quite significant that investors are quite concerned about the net asset position of governments rather than just the gross tax, the gross debt to GDP ratio. So governments can do this quite easily, satisfying international investors that what they're doing is sound.
Okay. There's kind of two linked questions here, so bear with. I'm going to try and put them both to you. So one says, do you see GLVT as just a revenue neutral substitute for council tax, or would you implement it more extensively as a way of reducing resilience on distortive national taxes? And then there was a second question in there. Would you recommend a shift in overall taxation from PAYE/NI VAT to this proposed GVLT? In other words, collect more from this and reduce the wider tax burden?
Yes, very good questions. I mean, I personally think that the revenue currently raised from council tax. Remember, there are, I think, 9 billion of unpaid council tax bills, because poverty has made it very difficult for people to actually pay their council tax bills. I think just from property tax by itself, even without extending the tax base, we can collect a bit more than the current council tax collects. But the extension of the tax base by including valuable agricultural land and vacant land in the tax base, I think would generate quite a lot more revenue. I think in the long run, we could try to put more of the weight on these kinds of taxes, and that would enable us to reduce some of the taxes on economic activity.
Okay. A question, very short one, that says, would such a tax encourage higher density? Is this a good thing? And I'm taking density to mean that conglomeration of people into dense housing areas.
Yes, it would encourage higher density, and there's quite a lot of green benefit from that. I mean, this kind of tax would mean that a resident in a well-insulated, 5-story apartment building will be paying quite a lot lower tax than someone in a suburban villa with a large garden, and that is beneficial because it encourages living in dense but green accommodation. Now, of course, the large garden would attract a lower tax on its own behalf. So the green discount is quite an important feature. It stops this kind of tax being labelled a garden tax, which otherwise land value taxes are often thought of as taxes on gardens. So the green exemption, the green discount, is a very important proviso that protects green spaces.
Okay, and again, there's a kind of an allied question to that from somebody who says, I live in a national park with a few acres of land, some of which is in a SINC, S-I-N-C. Would you propose some form of negative tax as I actively maintain this land for nature protection?
Well, I mean, a negative tax is like a subsidy. I mean, there are subsidies available, and I'm very much in favour of subsidising rewilding, and greening the landscape.
Yeah, it's funny. Sorry, this is a thought that went through my mind while you were speaking. That we could become a tax victim of catastrophic success of this. That with all of the green new housing coming up and everything else, that actually the discount becomes such that, having discounted down, you can't levy back up again. The tax revenues might naturally reduce because we're getting rid of old housing stock. The density you talk about is coming in. We're building very, very green efficient houses. So it's a good behavioural change, but just thinking about the macroeconomic lens of it, is there a materiality that could come in on the back of that?
Well, your dream, I wish your dream would come true. You know, a lot of the housing that's been built in the last 15 years is not at all green, and even housing that's currently under construction, some of it is going to have to be retrofitted to make it greener in the future. I mean, it's absolutely absurd what has gone on.
Yeah, and obviously we're at the start of another government cycle with this kind of intense agenda for efficient and effective house building going on. So another quick question, or more of an observation, perhaps not a question. A most interesting presentation, a bit more tricky in federal systems. I don't know if there's a observation you want to put across the top of that.
Yeah, that's a good question. I mean, Germany has a federal system, and as I say, they've had this revaluation with the separation of land values from building values. And I believe in Baden-Württemberg, which is the home of Mercedes and other high-value corporations, Baden-Württemberg, I believe, has decided to make the property tax entirely land-based. But that's one state in the federal system. So in Germany, there's devolution of the tax system to the federal states. In other countries, it depends very much on whether there are national rules, to what extent the national rules apply to the federal states. It depends very much on the nature of the relationship between the central government and the federal and the regional governments.
You have a nice compliment. Someone says, enlightening with very practical proposals. Is government listening to your ideas?
Well, as I said, on the first three of the four reforms that I think we need, I see light at the end of the tunnel. I see glimmers of hope, which were completely absent with the previous government. On the last one, I'm, it's to me, it's a tragedy that when New Labour came in 1987, which was only 4 years after council tax came in, they had the opportunity to at least tweak it and make it less regressive, and they completely ignored that opportunity. When Keir Starmer says his project is New Labour on steroids, that makes me really rather worried. However, it may be that in a couple of years' time, when fiscal realities become even more obvious, that they might have to think about actually shifting some of the burden of taxation onto wealthy landowners.
Okay. In a perfect piece of timing, we literally answered every one of the questions
Amazing.
that has come up, John. So thank you for that, and thank you for the candor. There was a point in question, well, this was a question and an observation. Are the slides available? Yes, they will be. They'll go up with the whole show page when it comes up. And of course, as I said before, you're going to have this on YouTube to go back and enjoy. And there is, of course, the site for all of the Knowledge Miles lectures, 100 or so that have been done this year. So we're spinning towards the end, John. So from my point of view, I've just got to do a little parish notice and put a call out for the upcoming lectures, which can be read. I will, as somebody who comes from the Lloyd's Insurance world, I will put a massive one in the middle one there for the 21st of October, which I will be chairing with somebody I do a lot of work with, Rosie Dene in Lloyd's. So please come to that one. But others all sitting in there, and it's going to run up right to the last minute, the last day of the Lord Mayor's term. So really, it's just some thank yous. So John, thank you ever so much for a really super interesting lecture, very, very thought-provoking. I'll be honest with you, not something I thought about, heard about beforehand. I managed to do a few hours reading ahead of it, and you've kind of got me engaged, got my brain engaged in that. So thank you for sharing such insights. As always, thank you to Lord Mayor Michael Manelli for creating this wonderful, wonderful year-long set of learning experiences for us all. His colleagues, and a particular colleague that John and I have been with today, Lucas at ZN, for producing the series and making all of this magic happen that comes up. They couldn't do without it. Absolutely, of course, to the good folks that have taken time out of their day to join us and sign in. So there we are, lots of thank yous. Once again, thank you to you, John. And all it really does and remains me to wish all of you a very happy rest of the week. And hopefully we'll see you on another lecture sometime soon. Thank you.
Thanks for having me.
Welcome.